for this year's Realty Infrastructure Conclave. We have as JLL, we are very proud of our long-standing association with the real estate industry in India and our links with those many successful Indian businesses all around the world. Every year when I go to the World Economic Forum, I interact with some of the great Indian leaders there, and I was very impressed about the development of the country. Today, I've been asked to share some views on the global real estate markets in the post-pandemic world. And listening to Ramesh and what he had to say, I'm not so sure that it is so different from a global perspective than what he was already outlining from a more Indian perspective. We have heard a lot of talks over the last couple of months during the pandemic around the future of urban living and the future of offices and what that will all mean. I would say the future of urban living and working may appear to be really in flux at the moment, but we believe that urbanization will continue and global cities will flourish and grow. I would be a little bit more careful than what Ramesh was just quoting around Stephen Schwarzman saying in a year from now, everything will be exactly the way it was before. I think that is too early to say. We are still in the middle of the pandemic, and the recessionary impacts which are coming on the back of the pandemic still have to fully play out. We see in a lot of countries massive government supports which keeps companies in business. The pandemic is still fully moving, and the recessionary impacts of the pandemic are still there. Governments have been very supportive to keep the economy running, and so the full outcome and the dropout of companies on the back of the recession still has to play out. What we see with regards to real estate is that the pandemic has accelerated major trends and trends which we have seen sometimes for more than 10 years already, which are now coming very, very fast. It's not only the new use of tech and data in ways we design and manage and use real estate. It is obviously that massive increase in the home working and the flex working, which is most visible. This will all lead to a situation where owning real estate, for all of you who are owners of real estate, owning real estate will become much more an operating business. And we know that already from those of you who own hotels or who own big shopping centers. In both cases, the owner of the building is carrying in full, mostly on hotels or in part, the risk of the hotel managing company or the retailer. And we will see this concept to move now across all asset classes. The other kind of major development which is accelerated is the heightened importance of sustainability. And you have to take sustainability in its broadest sense of the word. The well-being of the employees, their health is critically important. One of the challenges we have at the moment, why people are in parts of the world slow to return to the offices, is a lack of trust. They don't want to use public transportation, they don't want to use the elevators, and we have to regain their trust, and technology will help us to create an environment which is absolutely safe and sustainable for the employees to return to the offices. And what Ramesh was already saying, the growing importance of a positive human experience in the workplace is just very, very evident. This social place is critical, and many people are pointing that out. So the future of offices, if I be more specific around that, we took lots of surveys, and even at the height of the global lockdowns, where everybody was really scared, we saw from our surveys that the majority of people are really keen to get back into the office. And what we have to do, we have to be much more flexible around that. And we have to de-densify because a lot of offices, not only our offices, but many offices have become quite dense. And so we need now more space per person. And that is something which actually will increase the office demand going forward. And so the question of which has been discussed very often that we will have 10, 15, even 20% less office needs post-pandemic because of home office. Frankly, at JLL, we don't share that. It's still early to say, but at the moment, we see a lot of additional space requirements for the de-densification, a lot of additional space requirements for creating that social hub, that innovative environment in the offices. And yes, the space for the workplace in the office may be reduced, but overall, we see that the office space demand will stay pretty at the same level than it was before the pandemic. The other thing which is really critical is think about the CFOs of the big companies. They have seen during the lockdown that they have their second or third biggest cost as occupancy, and nobody's in the office, and they sit on these long leases. So what they will be requesting is much more flexibility around their lease agreements, shorter leases, ability to terminate them at short notice. And so that's what I mean, that the owning of real estate will become much more an operating business. As landlords, we have to carry some of the risk which our tenants are having when they sign leases. And so be prepared that you will have to show much more flexibility around that. But that will show also in the price, because the more flexibility you offer, you can ask for a higher price. It's like when you buy an airline ticket. If you buy a flexible ticket short term, you have to pay more than when you commit a year in advance. And take that concept, you will see that coming into the office space. If we think about the future of cities, there was and there is still a lot of talk, at least in the Western world, around that people want to move out of the cities. Just over the last couple of days, we could all read a lot of articles that New York and New York City will have moved into a really downturn decline now because people don't want to be in the city anymore. We disagree with that at JLL. We clearly disagree with that at JLL. And I believe that urbanization is actually benefiting from the pandemic, because the pandemic has shown us how important a very strong health sector is, very good doctors, hospitals in your community. And we will find that in big urban centers. So if people are moving out of the city in kind of 20, 30 miles distance, that is still the urban area, but they won't go rural. And so we believe that this trend is continuing, that the areas where you guys are mostly investing and where most of our business is taking place, that they will continue to grow. And cities are offering clearly better career opportunities. You have that vibrant culture, you have the social scene. There are all these arguments why young people want to get back into the city. And once the pandemic is behind us, that will be true what was true before. And technology will find solution for the challenge of the public transportation and rebuilding the trust. There are plenty of ideas already out there how we can make people feel comfortable when they use public transportation. Just quickly on the other asset classes, I don't want to take too long on that because Ramesh did that. I just want to spend a moment on retail. I think we already had for many years now the trend that retail is either an experience or it's a convenience. And so a lot of people are buying online because it is convenient to them. And when they want to have a real experience, they go into a great shopping center or in other cities, maybe a fantastic high street. And that is accelerated now very, very much. And so that convenience piece, which online shopping is offering for many people, is something which obviously retailers have to see whether they can compete against that and create an even better convenience when people are coming to the physical store. And I'm sure we will see many, many new additional services. But what is probably key is that, again, the landlord has to carry some of that risk which the retailer is taking. And so the idea that a retailer comes in and signs a very expensive 15-year lease agreement, that will probably decline rapidly. And we will have to get used to that. It will be turnover rents and all kinds of models where the landlord has to carry some of the risk, which may even go that far that shopping center owners will become shareholders of the retailers in the store, especially around restaurants, fitness centers, and those types of tenants in the building. I won't talk about residential. India is famous for its strong residential sector, and there are pretty significant differences between the different countries. But Ramesh was already saying that the need for more space in the residential units if we work more from home is quite evident. And by the way, that is one of the reasons why in many big and expensive cities like London or New York, people want to get back into the office because they don't have any space at home to work, and they need to get back into the office to be productive at work. So overall, I think real estate as an asset class has a very bright future. Interest rates globally are at record lows, and real estate is standing out as a steady income. If urbanization grows, the investable real estate is growing as well, and there's a lot of money waiting to be invested at the moment. In the short term, markets have gone very national. So as we cannot travel to buy and inspect buildings, it depends very much the performance of each country, how strong the national investment market is. But that will obviously overcome. We saw a 55% decline in the second quarter. We will see a terrible third quarter as well. But after that, it will slowly increase again, and investment will come back. So the outlook for the market is very positive. So I also agree in that positive outlook which Ramesh was giving. We have to adapt. It doesn't have to be the biggest company which is most successful. It's the most adaptable, the most agile company which will be most successful. At JLL, we are committed to shaping the future of real estate for a better world, to create better buildings, more sustainability, and we are very proud to service you as our clients. Thank you very much.